Good morning, traders. Can you hear me? Raise your hand if you hear me today. This is Dan with AITG. Okay, I see your hand, see your hands. Okay, do we have Trish or Trish and Brian today? Okay. Well, here in the eastern part of the US of A, it's about 9 a.m. in the morning. For some of you, it looks like it might be afternoon. Okay. Roger's going to be along shortly this morning. Meanwhile, just to get this started, let me go ahead and read my obligatory disclaimer just so it'll be on the recording. I know you've all heard it before, but we have to read it. Number one, we are not licensed financial advisors or broker dealers. We do not tell you when or what to buy or sell. We develop trading software which allows you to conveniently manage multiple trades simultaneously, both on an individual pair basis as well as on an overall account equity basis. Our trading systems allow you to set the criteria you want for entering and exiting trades. Number two, do not trade with money you cannot afford to lose. Number three, we do not guarantee consistent pips or that anyone can make money with no effort, and we are not selling the Holy Grail. Number four, every system can have winning and losing streaks. Number five, money management plays a large role in the results of your trading. For example, lot size, account size, broker leverage, and broker margin call rules all have an effect on results. Also, your take profit and stop loss settings for individual pair trades and for overall account equity have a major impact on results. If you are new to trading and do not understand these items, then we recommend you go to babypips.com and study there for a while and then come back to us. Okay, now you see on my screen I have a sample test that I had ran in the past. I don't have a sample running right now to show you in real time, but I did want to put this up just as an illustration. Now I think all of you here now, looking at all the names, I think you've all got pretty good experience with the dashboard, and you know about our trading systems, what they are. Now what you see here on this particular example is a test that I had ran using the DeMark lines. And of course, any one of these trading systems you can use in various ways as far as how you set the take profits and the stop losses, etc., what time frames you put it on, etc., what time you start it, for example. This particular trade looks like it started around the 9 p.m. area, my time, 8 p.m. So it was in the early evening, a couple hours after Tokyo Open. And in this case, we inactivated the per trade trailing exits. And as you recall, on the input of your chart, each of your charts, the trading system inputs, you can select a per trade in pips, a number of pips to close the trade at a take profit, or a number of pips to close the trade at a stop loss, or you can have, in pips, you can have a trailing stop as it goes on into profit. So you can do that on a per trade basis, and you can also have a take profit and stop loss based on the ADR. As you see here on the front of the dashboard, you have a take profit and a stop loss, and those two columns are in regard to the ADR. ADR being the average daily range of each pair. So in this case, it was set to 0.5 of the ADR for a take profit. In other words, 50%. So here, given ADR on this pair, the Aussie Swiss was 49. So the take profit was at 24, half of that. Likewise, on the stop loss, it was set for 1.5. So we gave it plenty of room to run on the stop loss side. So it'd have room to breathe. And we had it set for 1.5. So then the stop loss on that pair would be 1.5 times what the ADR was. So you could have multiple scenarios going on at the same time in regard to take profits and stop loss. These are involving pips, and the one inside each chart is involving pips. And of course, you know that we have also equity basis. You can set an equity lock, or you can set a fixed equity take profit. You have all that type of variability. Now, what a lot of us are, by the way, if everything I've just said and explained to you, I think all of you have familiarity with that. Could you raise your hand to confirm that?
Hey, Dan, I got their mics turned on.
Yeah, okay, good. So I see Roger's here. Okay, everybody's hands coming up. Okay, we've got some other exciting things on the horizon. I'm going to let Roger take the screen now. And
Yeah,
Roger, do you want to?
Yeah, I'm just getting set up now here, Dan.
Okay. Well, I'll keep talking for a few minutes while you're setting up.
That's okay. How you guys doing today? Fabio, you there, buddy?
Yeah, I'm here. All good.
It's a long day at work today.
Well, it was.
Is it better? Is this better for you to come to a webinar at night for you, or in the morning?
Night's better for me.
Okay. How about you, Trish? Or is that Trish or Brian here today?
Both.
Is it Trish? I couldn't hear. But all right. Let's see here.
It's both of us.
Okay, good.
Both of them.
Do you like the evening better for you?
Yeah, I like the evening better too because I've been at work today.
So you guys ain't morning doves, huh?
Well, it's only because I'm working, but I have Fridays off, so it's only the certain days.
Okay.
I'm working on giving up work.
You're working on giving up work.
Yep.
That's everyone's goal, right?
Yeah.
All right, here. Let me let's see. Oh, here Eugene just checked in. Let me move some people around here. Let's see, make an organizer. And hey, John, how are you doing this morning, John? Do you have a mic? If not, you can talk to us in the chat or there we go. Oh, he's on his phone. Okay. Awesome. Well, welcome, John. Gene, are you here now?
Yeah, got it now.
All right. Okay. Let me see here. We are, I don't know if you guys have picked up on our hints that we've had on Forex Factory and other places. Gina's working on the next version of the dashboard. And we have nothing to show except for what he's shown on. Have you guys seen that on Forex Factory?
No.
Yep.
I think it's pretty amazing the changes that he's done. Maybe Gene can touch on them. You want to give a little sneak preview, or not preview, but just a verbal preview of what the changes are, Gene?
Well, basically, they're just going to be to the take profit and stop loss you use in the dashboard. There's going to be a new column over there, if you've seen it over on the forum, for setting a stop loss and a take profit as a dollar value. It'll work a little bit better when you're doing hedging and things like that. So we got some testing to do this week yet to see how it works out. It should should help the heat map function better, get you some better ins and out on that.
Yeah, I'm gonna change the screen here and just show you that real quickly here. See, hopefully I can do this and not have any blinking this morning. All right. Wow, look at, there's Trish and Brian's post. Look at all those green pips they're making here. You guys saving any money in down there in the Bank of Australia for other people?
No.
You're taking it all, man. Oh, where is that?
I'd give it all up for a little more.
A little more, huh? Oh, let's see. Oh. It was here somewhere.
Was it on the Forex Factory or was it on our website? On the
No,
video?
it was at the Forex Factory. He had it
Okay.
posted at the Forex Factory. Yeah. Let's go to the bottom of the page. That wasn't it. Oh. That's we're also testing the new Subtem trading system. We just started testing that last night, and that's going to be phenomenal. You guys are familiar with
I
Subtem?
believe there is a preliminary video on that on our website under the
on
videos at
Subtem.
the bottom. Just a sneak preview.
Yep. Huh. I thought there was. Nope. I can't find it right now, but we'll press on here. Hey, Fabio, how are you doing? You doing okay now?
Yeah,
I
yeah,
know
all good.
You had a question. You had a question the other day. I don't know if I got that answered for you or not.
What question was that? Just trying to think.
I thought it was they sent an email question, or I think
Oh,
I did
yes,
answer it.
yes. Oh, that's all right, Rog. We'll just, yeah, see if it comes up again, really.
All right. Let me go through some of our some of this testing we're doing. You can see that if you guys have been following my daily updates, the daily heat map I discontinued that. That wouldn't really need some tweaking there. Earl Smith, who's usually here, came up with a great idea on the 4-hour heat map. Let me get a screen open here first. Let's see here. Show 369. There we go. All right, this is the 1-hour Haas breakout London, one and done. Is it blinking? I'm so sorry, guys. Let me move my stuff away from. I have 6 screens here, and I think I don't know why, but if another screen touches it, it gets all freaky, starts blinking. What he's doing on the 4-hour heat map, he's using his 4-hour heat map, and he's turned on the take profit to 0.02, and he just toggles this down to 0.02.
Is that current, Roger? Is that like live?
Yeah, this is current right here. I'll talk about that in a second. And then the stop loss, he toggles it up to 1.1. Oh, I don't know why I did that. That was stupid. All right. I should have done it on a 4-hour. But anyway, and so what it does, he's picked up, I don't know if anyone's seen Earl Smith's post on our Forex factory forum, but I think overnight, a couple nights ago, he picked up almost 400 pips, which was pretty amazing. So, you know, again, this is a copycat league, and anyone's free to copy what anyone else is doing here. But I thought that was pretty cool that he thought of that and basically what he's doing is he's giving that stop loss 1.1, and it's just a way to cover any big drawdowns, you know, on an individual pair basis, any runaways. But he was nickel and dime them to death on the take profits using a 0.02. And like I said, he banked cleared over almost 400 pips. So I thought that was pretty amazing. Yeah, this London here is just been. I don't know who else is that. Fab, are you running the London?
Yep. Nothing showing for me. You've got a sell on the British Aussie, but yeah, I don't have that on my system.
Okay, is yours looking about the same?
Yeah, except that one.
Yeah.
Same except the British Aussie.
So you know, I mean, this has been you know a second week here of fighting this, and I have illustrated and you know let me just reiterate here, guys. The you know I could have taken stop losses, equity stop loss a long time ago, and reloaded and kept on trading. But I wanted to, I purposed to do this on these to show you guys the different ways of trying to rescue a bad trade or a bad basket back to health. And doing that through hedging and through pruning, you know, pruning off maybe some negative ones that are still going, you know, looking at the charts, or you know, going when the indicator or the trading system starts going back to your original position, take a second position going back towards your original position just to expedite getting to that break-even point. So those were a few, but let me show you. Let's see. The 1 hour Haas breakout that has only taken one trade, and it's in drawdown right now. These are all restarts from last night, or not the London here. Is anyone running Rinkos? No. Let me just move this over. No, that's not it. There we go. All right, this is the 10 pip Brinko. Remember, this was in some pretty big drawdown, but it's come back. It's banked 840 pips in the cycle profit and loss. Current right now, current basket equity is 89, and you know, everything that we've been running, I think.
Yeah, John Tran made a comment on here, Roger. He says, he said, to my experience with the dashboard, says huge drawdown normally happened apparently during the last few days of the month, and Thursdays and Fridays is what he has seen recently.
Yeah, that's. I was just going to say that this being non-farm week, non-farm is Friday, and usually at the end of the month is you get huge drawdowns, pullbacks, and also during the normally. I think we talked about this a couple webinars ago. Historically, Mondays and Tuesdays are positive days, and then Wednesdays, and sometime into Thursdays, the markets will struggle, and then usually Fridays, non-farm payroll Fridays, somewhat they'll come back. That's a rule of thumb. Is it always like that? Not you can't bank on that, but that's an overall.
Or sometimes it may go several weeks, very positive, and then a given week or a few days will pull back.
Right. And that's the thing with basket trading here is that what is an index? Like the Dow Jones Industrial Index. It is an index of various types of companies that give you a cross section of our economy, of the U.S. economy, and they particularly use certain companies from all the different sectors, and so this is kind of like a Dow Jones, because we got 28 currencies, and we're covering all the major and exotic and minor currencies, out of all 28. So you get an index, a cross section of the world economy here. If you trade it as we are, as in the basket form. Yeah, it's here's that 4 hour. Yeah, this is in drawdown too. Let me show you this. Yeah, these Rincos. Let me talk about the Rincos real quick. The Rincos, I'm peeling off. I'm taking profits per pair, and also taking basket equity of 50 pips, $1 a pip. And if you get caught, you get caught. And so the best way to handle this would be to use a take profit. I did have the jumping take profit on this, and it was getting eaten up pretty bad. So I think we're going to have to rethink these Rincos here, and reload after the non-farm payroll.
Oh, you were trying the jumping stop loss? Yeah.
Yeah.
Mm-hmm.
I'm kind of excited about the new dashboard coming out, because let me bring this over. Give me a second here, guys. Normally my screens don't give me this much of a problem. I have to be moving them around. All right. All right. Here's the 4 hour heat map using the ADR take profit. And what I did do is I did toggle down to 0.2 on the take profit, as Earl Smith did, and it's picked up 85 pips, but it's still basket equity overall. And it's just one of those fights right now. We don't have any charts open, but you could open charts, and we have the Haas trading system on there, and you can go in there and look at this and say, well, it's right now price is broken the Haas. It's going away from our original position, and you'd be looking for a hedge trade. Again, remember what the hedge does, it locks up that margin, doesn't eat up any more margin. It just nullifies puts the trade on hold, as long as you have balancing, lot sizes. So the sell was $1 a pip, the buy would be $1 a pip. Now what you could do is you can do what I call go in rescue mode, where you would go at least do a 2-to-1, if not 3-to-1 ratio over the original position. So this buy hedge would be at $3 a pip, and that way you would overcome this short as long as the position continues to go. And you got to make that judgment call. You got to zoom out and look at where price has been. Look at your trend. Okay, this was obviously a downward trend. Make a determination. Is this just a pullback, like we had here, and then a continuation in the trend, or is it a trend reversal? All right. And what constitutes a trend reversal? Well, it all depends on what trader you're talking to. But in my book, 2 to 3, like this was a short trend, and then it looks like it's going back up. Well, where I would declare that a new trend going long would be at least 2 to 3 lower highs, all right, or higher lows. Which way am I saying that? So
You mean higher highs?
well, right, yeah. So that would give us that would, in my book, determine a trend reversal. You could fib it out and use that method there. But so you're looking at this, I would not go into a 3-to-1 or 2-to-1 hedge trade on this yet. I would still wait and see if this is just going to be a pullback and come back to our original position. So if it does come back to our original position, in other words, price starts coming back down towards the Haas, you can do one or two things there. You can just be patient and wait, and when it gets to the break-even point, plus a couple, close it out. Or you can help it out by putting on a additional sell at 1-to-1 or 2-to-1, and what that would do would be expedite getting you back on your equity of this trade here back to a break-even plus. Does that make sense? Has anyone tried any of those techniques yet?
Yeah, we just did that tonight, actually.
Oh, okay.
Mm-hmm.
One of the trades was going, we'd lost a bit on it, and then it started to come back on, so we put another extra trade on, and yeah, it did help. They ended up going green before it hit the original, where the original trade went on.
Right. So you got into profit and closed it out before it got to the original position, right?
Yep. We just closed a basket wide just as the webinar started.
Cool. So it does work. Sorry about this flashing. It does work. Does it work all the time? No. I mean, can we really guess? I mean, it's not, I don't want to say guessing, but if we had the crystal ball, then we'd all be millionaires. We'd be talking on the beach somewhere in Tahiti or Fuji or St. Thomas, right? But we don't.
Well, that's another good thing, Raj, about the whole basket idea. Let's say you are in this situation where you're in rescue mode,
Mm-hmm.
and you start looking at some charts, and you're looking at several pairs, or you may put on some rescue trades with bigger lot sizes, etc.
Mm-hmm.
You don't have to be 100% right. But maybe one or two of your rescue trades don't go your way, but 4 or 5 other ones do, and the overall basket gets rescued, even though every single trade didn't.
Right. Exactly. Exactly. And that's what's nice about the hedging there. Like you said, you don't have to be 100% right. If you can nullify or put in check a couple of these trades, while you look at some that are going positive or coming back to the positive, and let those positive pairs carry the weight of those negatives or the ones that you got put in check by the hedging, and then you reach your goal of your basket equity lock or your take profit, your equity take profit, or whatever your basket exit is, then you don't have to, you're not looking for 100% winners out of a whole basket. So that's the beautiful thing about basket trading. Now, what the new heat map is going to do, and Gene, correct me if I'm wrong, please, but there's going to be was it the stop loss will trail? Is that correct, Gene?
Yeah, I can show you that here in a little while if you want to.
Okay, that would be awesome. I'll give you the screen here in a minute. Let me just finish up on this right here. So I think that's awesome, Trish and Brian, that you are exercising some of the tools that we've shown, and you've seen them, you've illustrated them yourself, and you see that they work. Have you had any times where it hasn't worked yet, Trish?
No, not yet. Just got to be a bit patient. That's my biggest thing is and like I've been learning patience for the last 5 years. I'm not a patient person, but it's teaching me more patience.
That's awesome. So you say you guys want to retire and be full-time traders, right?
Yep.
Don't
want to be filthy rich, just enough we pay the bills and have a nice life.
Just be comfortable. Exactly. Well, you know what? Let me tell you guys something. What you guys are doing, and the patience and the consistency, you guys will be there soon enough. Trust me.
Yep.
I want to say one thing about trading, and I don't know how long John's been trading. I know Fabio's been trading about 10 years, and I think I shared this with Fabio in our one-on-one we had last week. Out of five, it's up to $5 trillion a day now. $4 to $5 trillion a day is exchanged on the Forex market worldwide, which makes it the largest financial market in the world. It trades in one day more than what the S&P does all year. Okay, and out of all that money exchanged, and you can read this anywhere, only 10% of the people trading make profit. That means 90% of the people out there trading are losing. Now, I'm not saying that to deter anyone. I'm not saying that I want to turn that negative stat into a positive mindset. You want to be in that 10%. You want to be a 10%er, not a 90%er. And one thing that I think I've shared with, I don't know who all has been watching my daily updates, but I started talking a little bit about this and about the supply and demand trading. Supply and demand trading, and I encourage you guys, if you haven't, go to that video that I posted probably somewhere around page 15, 14, 13, somewhere around there. There was a video on this mercantile trader on the Chicago Exchange who broke the code on it. He had that aha moment on what supply and demand zones are, and he very simply and basically breaks it down and shows us in his video what supply and demand is. They're nothing more than a stack of buy orders and a stack of sell orders. And it's like a tug of war. It's like a tug of war. Excuse me a second. It's like a tug of war. And hang on a second. Dan, could you take the screen or just?
Yeah. I can talk to them a little bit. Talking about this supply and demand. You'll hear some people say, well, the supply and demand requires that you are able to know the volume of orders that are existing for buys or sells.
Right.
And they'll say that, well, you can know that on the stock market, but you can't know that on the Forex. Well, you really can. It is known on Forex.
Yep.
The difference is what the data you have on the Forex is the volume of buy and sell orders from your price feed. You know, there's multiple price feeds in the Forex world. It's not all just dumped in one basket. Every given
Right.
price feed could be from a multiple number of banks or various other sources.
It's the liquidity banks that right, that are controlling that. So I'm sorry, I had my morning coffee delivered to me, so I had to get that. That's important for you guys in the morning time. But you know, I don't want to get. I mean, we can really get technical on the supply and demands, but when you look at a supply and demand chart, you know, a chart with supply and demand on it, it's like a tug of war of who has the bigger stack, the buys or the sells. All right, and the banks, what it really represents is what the banks are called. It's kind of showing the manipulation of what the banks are doing. The banks are the ones that are controlling the money. All right, all the central banks, and all the major world banks there. So what he says is that if you want to be a 10%er, this guy's name is Sam Sardine, I think was his name. You gotta think like the banks think, and not like with a trader. And he gives some illustrations where some setups where the trader would see one thing, the banker who controls things sees the opposite and then does the opposite. And so you got to change your whole thinking from being a trader to thinking as what the bank would do. That makes sense. Anyway, I think it's only a half an hour, 45-minute video, but I highly recommend you guys, if you haven't done so, check it out. You'll get a lot out of it. And the thing about supply and demand, it is price action based. It's not a lagging indicator. It's showing you in real time where all the stacks of buys and sells are. And once you see that, and you can really trade, you know, more of a real time instead of using lagging indicators as most traders out there use. So anyway, the reason I said that because I am really excited about the testing that we've started on the new supply and demand trading system, which is fully auto. And I think I've shared with Fabio, I've been trading the supply and demand for a long time now on a manual basis. And you know, of course, with anything you do manually, you got to be in front of the screen. And so far, the supply and demand trading system does exactly what I've been doing manually, but it does it auto. And it's like getting in a plane and putting on the autopilot and sitting back and relaxing. So anyway, hey Gene, so can I give you the screen now and give us show us what you got so far?
Yeah. Okay.
All right. Yeah, so with this new version 3, it's really going to change the way that, especially the heat map trading, it's going to really change the way that I've been trading the heat map trading. And so I'll probably just kill all these, when it comes out, I'll kill all these heat map setups and restart in version 3.
Okay, you seeing the right screen here, the one with the dashboard on it, or?
Yep.
Yeah, I see it. I see it, Gene.
Oh, okay. Good. Well, this is what the version 3 will look like when you first open it up. You notice it's, I had to squish it together a little bit, and I had to change this column here because I needed to add a couple columns in here. I didn't have room because there's these 2 columns. I'll show you what they are in a minute. And I really didn't want to make it any bigger, you know, this way or down if I didn't have to, because some people do have trouble getting it on their screen. So I squished it over, and here's the trading system. The TS is right here, and I made the button a little bit bigger so you can pick it out of the rest of them a little bit easier. and also that column that used to have the X that showed you that you couldn't take another trade until the candle closed that the dashboard was on has been moved. It is actually on top of the TD here now. I'll show you that in a minute. But basically what we got changed is the take profit and the stop loss columns are now based on price. When you turn them on, they still show up as pips, and based on the ADR, right now it's set at 1, so the take profit would be 51 pips based on what the present ADR is. Same way with the stop loss does the same thing. As you see, as I clicked on those two columns, we got these two new columns popped up, a stop loss column and a take profit column. Now these will show the actual price that the stop loss or take profit is at based on the pippage here. So 51 pips, it would convert it over into a price. And as we all know,
into dollars.
remember we used to say if you had the lot size set at 1, that it would convert over to $1 a pip. But if you look at the stats here, you can see the value of a pip varies from pair to pair, So the only one that's, there's a couple that are 1, like the euro dollar and the Nazi dollar are both $1 a pip, or all the other ones are not. They could either be a little bit higher. See, the highest one here is $1.33 for the euro. Pound is $1.33 a pip. So it takes into account this value here, what the pip price is for that pair. It also looks at the lot size, and it'll convert it into a take profit price or a stop loss price. And basically the reason we are converting this to a price now is because when you do hedging, before, when you did hedging or placed more trades on the same pair by clicking the buy or sell button over here, and say you had 2 or 3 trades on this same pair, basically the dashboard was originally designed only to look at 1 trade per pair. So it was only looking at the last pair. So say if you had 4 or 5 trades open on the same pair, some were long, some were short, the stop loss or take profit would have been only looking at the last one you put on. So say if the last trade you put on say on the Aussie CAD hit your take profit or stop loss, it would close all the trades on that pair. And even if it hit the take profit on that last trade, the other trades could be in a loss. You could end up losing. And you would think, what the heck's going on here? I hit my take profit of, say, 51 pips, and I ended up losing. That was because it was looking at only the last trade you put on. It wasn't looking at the basket of trades. Whereas the profit or loss over here, which is a dollar value, even in the old version, was looking at all of the trades that are on that pair. So this gave you the right profit or loss or wherever you're at the time, but these did not. These only looked at the last one. So now we convert these over into dollar values, and now they work better for hedging and things like that. And let's see here, we can trip on a trade here once to show you what comes up over there. Right now I just got it at 1-to-1, and I'll show you how it, let's see that we can pick one. Let's pick the Aussie dollar because that's a 1-to-1. So we'll just try on a buy here for the heck of it. And my thing popped up on the other screen here, so. Okay, so we're gonna buy. And as you can see, we get the take profit set at 1 and the stop loss set at 1. And as you can see, the ADR is 54 and 54. And after doing a calculation using the lot size, which is at 0.1, and over here, the PIP value, which is actually at $1 for this one, you can see we came up with a stop loss of 53.80 and also a take profit of 53.80. Now let's pick one that's let's pick a small one over here. Let's see which one's the smallest. Euro New Zealand. We can do him. Say if we do a sell on the Euro New Zealand. There, as you can see, we came up with $91.78 as a 1-to-1. Well, actually, the ADR is 132. Take profit, stop loss, 1-to-1. But you can see the PIP value is only 70 cents. So if you were to calculate this out, you would end up with $91.79. Where normally before you would have said, oh, if I do a 132 take profit, I should get $132 at a 0.1 lot, where actually you won't. You only get 91.80 because the value is only 70 cents a pip on that pair. And as you can see, here's the X now, telling me that I cannot take another automatic trade on that pair until the candle closes, which I'm on a 1-hour chart. So you got about 13 minutes, then the candle will close and these will go away. So I move the X over here. It's on top of the TD column. So this right now is using that stop loss, and that is a fixed stop loss. When this is red and this is red, it's a fixed stop loss. Now what I can do is I'll close these here for a minute. Now if we click this again, you notice it turns orange, and this one turns orange, matching colors. Now what that means, when it's orange, it now becomes a trailing stop loss. So we take a trade there. As you can see, 159. That's on the Euro Yen, and it's got a pip value of 0.92 cents. So that's why the 159 does not match the 174. It's a little less because we only get 92 cents for each pip. So if you multiply 92 cents times 174, you should come out with 99, or 159, I mean. And as you can see, these are both. Now you see how this one is changing? See, we're already gone into profit. Once we go into profit, this starts to trail, and you'll see this gets less. It started out at 159.71, same as the take profit over here, and we're already gained a couple dollars on it because we have moved into profit. So once we move into profit, this will keep moving up. It is a trailing stop loss now. So now we have a trailing stop loss on this pair, well, on any of them, whichever ones you have on. So they're all going to trail. And once it gets to 0 or goes above 0, this will turn green, which means if you do fall back, you are locked in at whatever it is. Of course, right now you can go all the way back to $157 is where it is trailing at. And as you notice, we've gone back into the red here, and this has stayed put. It has not moved back down. It only moves up as this goes up. So it's a trailing dollar stop loss, and we also have a dollar take profit now. So that's what those are doing. Now I've also added one other thing in here. I don't know if I'm going to leave it or not. It concerns the heat map. Remember before, when you've clicked it once, it would just show you the heat map so you could get an idea what it was doing. I'm going to set it on 240 here. And if you click it again, then it would act as a filter for whatever you had coming in on the TS from, say, a TS over on one of your pair charts. And if you clicked it again, now you were trading strictly the heat map. And you can see we do have one signal here on the 4 hour. The New Zealand CAD is telling us to buy. So we do have one signal there. You clicked it there, and then you would be trading it. And I think you're all familiar with these arrows, but remember these arrows do come and go, whereas these stay put. These will only update over here if we're on the 4 hour, once every 4 hours. So when you get a new 4 hour candle, these will all update. But these arrows will come and go within that 4 hour period because they're looking for the best entry in that 4 hour period. So if the price happens to be going down, and this is telling you, see now it went away, so apparently the price has retreated a little bit and it's telling you over here to buy. Well, you don't want to be buying when the price is actually going down. Now it's going back up. It's flicking around there, so it must be kind of just going up and down a little bit. You want to be moving in the same direction the price is going, along with whatever this is telling you. So there's no point in getting in when it's telling you to buy over here and then when the price is going down. Maybe it's retreating a little bit. So that's why these flicker. They will come and go because it's a separate part of that. But I have added, I don't know if I'm going to leave it or not yet. I know there was one request. We've tried it before in the past, our group has, and didn't have a heck of a lot of luck with it. But as you all know, the heat map is a lagging indicator. This only looks at your history, so it can't read the future. So it's a lagging indicator, so it's always going to get you in a little late. It's like entering a long-term trend. Trying to get in at the swing high, swing low. You can never do it. You always get in late. And also, if you want to get out using it, you get out late. So you get in late and you get out late. Well, we've tried in the past, and somebody suggested again, I believe over in the forum, that he wanted to use the heat map also as an exit.
Mm-hmm.
So you can get in with the heat map and you can get out with the heat map. Now if you click this again, you notice it turns into a magenta color. What that means now is you will enter on the heat map, and when the heat map changes direction, so say if this went from a buy to a sell and you got the proper color arrow over here, it would exit the trade. I haven't tested it too much yet to see, but I know our group has tested this in the past. We've played around with it and we kind of left it at the time. We didn't stay with it. But you can't separate the two. They work together. So you either got to get in and get out with the heat map. That's your only choice. Or just get in. You can't just use it as an exit by itself. It's not separated out. So it's kind of up in the air whether I leave that or not. But as you can see, this is the column I changed. I just squished them all together because I had to add these other two columns in here. And you got your TS button up here, which I made a little bigger so it's easier to pick out of the row up here. But I think the stop loss and take profit should work out pretty good, especially when you do the heat map. Let's turn this off for a minute, do that. And so we could set up the heat map like this for 240. I like the 240. I like it better on 240 or even the daily. Daily's nice. The only thing is when you get up into the longer time frames, of course, you got to wait a bit longer to get into trades. But if you're on a daily, once you start getting into trades, it may take a week or 2 weeks or a month. You get into a lot of trades, you can get into the longer trades, and it just takes you a while to get there. But what you can do is set up your heat map, and then set your take profit, whatever you wanted over here. I don't know. Depends on what you want to. Oops, I'm going the wrong way. Whatever you want to use. Sometimes you don't want to get too carried away. And then set your trailing stop. And that would give you like a 2-to-1. Some people play it in the other direction. They play it 2-to-1 going the other way.
1 to 2. Yep.
Yeah, depends on how much pain you want to go through, I guess. But set that up, and then you got, like I said, it's orange, so that means this is going to trail when it comes on. So you get that turned on, and you get the 240, and you got your TS turned on, and you turn on all your buttons over here. Then all you got to do is hit your. I usually go for 24 hours and let her rip. I do have a screenshot here, I think, of one I did here. Yeah, this one here, I forgot to turn on the trail. I didn't use the trail. Oh, this is a screenshot of, I think it was yesterday. And as you can see, it only went like, this was a time period of what, 3 hours?
Yep.
This is what it did in about 3 hours. We got all the way up to 242 pips. See, that's what case where we're saying 242 pips again, based on one where actually it's really not 242. It's $242, but not 242 pips. We just kind of use that as a general case. And we got 161 bucks have closed out. You can see it took 4 take profits hit, which means this take profit column got hit 4 times. And you can look down here, you can see the pairs. There's one that got hit there. There's another one got hit. They got hit. And we didn't actually have any stop losses that got hit. So that was a good start. Got up to 81 in the present open column. And we got 161 in the bank. So totally, if we would have closed it right at this time, we would have had 242. So that was a case there. But like I said, I forgot to, this was just using the fixed take profit. I mean, stop loss and take profit. Take profit's always fixed. They don't move. And I had him set at 0.4, and I had the stop loss fixed at a 0.3 of the ADR. Remember that it recalculates the ADR over into a dollar value. So that basically is what that did that time. That about covers it, I guess, for that. I could, you want to go over should I show the sup dem a little bit or not?
Yeah, please.
Yeah. Sure.
Okay, let's see if I can find it here.
Hey, do you guys have any questions for Gene on the dashboard while he's going over to sup dem?
Okay, we'll run over this. Oops, is somebody gonna say something?
No, I was just going to say, no, it looks good.
Yeah, it should work out pretty good. That way we should work out real good for heat map, or it should work out good for the TSs too. You can use this on the TS too. Just don't turn any. Well, even if you over on the TS, if you turn like a stop loss on or a take profit, you can use them in conjunction with this. Whichever one hits first will close the trade. So if this one hits first, or if the one coming from the TS hits first, we'll close the trade. So
Just gives you so much more flexibility with this next version.
yeah, it should work out. So far, it's testing fairly good. So we'll see how it goes. Let's see. Here's the sup dem, and here's your choices you have with it. Now this could change quite a bit. We're still just in the early stage of this. What we want to leave in here. Right now, I got what I call, I don't know if any of you looked, I think I did put out a video on this, so I might be repeating a lot of stuff if you already seen the video, but we got like an auto take profit, and we got an auto trailing stop. Now what that means is, oops, I should have showed you there's a value there. Like here, there's 0.5 take profit multiplier, which is actually, this is like now I usually use based on the fibs. Usually I use the fib numbers, so 0.5, or you can put 0.618. You can put anything you want in there, up to 1, or you could go past 1 if you wanted to, I suppose. But what that does, when the trade opens up, let's see if we can expand this a little bit. Like now, set at 0.5. Now this would have been what it does, it puts, these are the trade zones. It will only trade if the price is in this zone. And these zones are based on the supply up here and the demand zone. So say if we would have taken a trade back here, now remember these supply and demand zones take anywhere from 2 to 3 closed candles before they all of a sudden pop up. So you may look at it and say, well, how come it didn't take a trade or something like that if you get one where it really takes off really fast out of the area on the first candle, and you're all of a sudden you look at it, you're over here, and you say, well, why didn't it take a trade? And well, it's because the zone hadn't even formed yet. The zone take a couple closed candles before they will form. And this is, you have to be within this zone, and you can set this zone. I'll show you that in a minute, but now that automatic take profit, if you have that turned on, what it looks at is the distance between the zones, our supply zone and our demand zone down here. And like I had it set at 0.5, which is 50%, it would automatically put, like if we were coming out of this, to say we took a trade out of here, it would put it at 50%. So we got about 160 pips there. So it would put it at 180, which would be right in the middle. And like I say, a lot of times I use fib numbers, so I may say like 0.618, which would put it at a fib of 618. Or if you put it at 1, you got to go all the way to here when it breaks out. So that's what those numbers are. The automatic stop loss automatically puts it at, like if we break out of this supply zone, it automatically puts it at the opposite side of the zone it broke out of. So it would put it right here. That's where it would put that automatic stop loss for you when the trade opened. And there are some other settings there. Now you could see this trade window. Right now it is set at 6, which means 6 candles. Get this over out of the way. Where is it? Here. 6 candles. That means the width is 6 candles. So if you want to wait longer or less time, you can increase this or decrease it. And like I said, you don't want to make it any smaller than 2 or 3 candles, because this won't even form until you get a couple closed candles. So you don't want to make it too small. 6 seems to be a good deal. And we also got what I call the percent height, 0.25, which is actually 25%. What that means, close these a minute. Like I said, there's, what did I say here, 160, about 160. So 25% of 160 is 40. So the height of this should be about 40 pips. Yeah, right in there. So the height is 40, so you can adjust this height if you want to, but you don't want to go too high on it. If you make it too high, then you could get in way down here, and you don't want to get it too close to your take profit either. So if you set this at 50 and your take profit at 50, you could be getting in at take profit and getting out right away. So you got to watch out where you set those. And I think there's one other setting here. The space multiplier is set at 4. Now what that means is, right now, the width, we're coming out of here, we're going to do out of the blue area, we're going to be doing a cell, and our supply area is 8 pips. That multiplier of 4, so it takes 4 times 8 is 32. So you got to have at least 32 pips between supply and demand, which of course we got 160, so it fits in there. That's what that means. Of course, when you get a big, like say if we were coming out of this zone down here, we got 84, 336 or something like that. There's no way it would take that trade because there's not enough room. See, there's only 158. There's not enough room between these two to fit 4 of these in there. So this trade, it would not have taken. This trade would have taken. And also, let's see, like I said, all these settings aren't permanent yet. We still have the trailing thing yet. I don't know if I'm going to leave that in there or not. We're still doing a lot of testing. We also got a show all subdem zones. As you can see them all now. Give this a minute, and we can shrink this up a little bit. You can see your previous ones if you want to. The only ones we actually look at are the last supply zone and the last demand zone. So if you want to get the other ones off there, you can set this to false. It doesn't affect anything, it's just how it looks. And click OK, because these are the only ones we actually are interested in. The other ones are more or less for your information to see how many supply zones or how many demand zones there are, and gives you a better idea which direction maybe you want to trade it. And of course you can always use the heat map back in the dashboard if you want to use as a final filter, just like you can with any TS. I think that about covers everything. Like I said, this is not all permanent yet. And of course the alerts, if you want to turn on the alert mode. That way when it signals, it will only give you an alert. And then you can come and look at it and see if you agree with it. And if you agree with it, you want to take the trade, you just click the alert button and the alert mode goes off, and it automatically goes into the real live trade mode, and it will tell the dashboard to take the trade for you. So I think that's about it on that. Like I said, a lot of this stuff may change. Okay, we do have an opposite exit signal here. So if you turn off, say turn off your take profit, leave it at false, what it'll do then, like in this case here, you would have entered a short, it would have went down, and as soon as it got a long signal, say it came on with a long signal, it wouldn't have here, of course, because this is too big, it wouldn't have fit in here, but say if this was a long signal, it would have exited when it got this long signal. So by going opposite signal, you can go from supply to demand, and then demand to supply. It's a lot of things we gotta test on yet, so I think that about covers it. So you can take her back now, Roger, if you want to.
Yeah, hey, before we I take it back here, I just want to illustrate here my experience. I mean, there's so much flexibility here with this new trading system, but one thing that I use, which is very consistent, is 50%. And I think, Gene, you had it defaulted there, the multiplier of 0.5, right?
Yep. Mm-hmm.
Hey, and that multiplier is not based on ADR. It's based on the movement of the whole from subdem to subdem. Correct?
Yep.
Yep. All right. So yeah, because I just want to make sure everyone understands that, because our other trading systems do use an ADR multiplier, some of them for take profit, and this doesn't. So just because it says multiplier in there, it doesn't mean that it's a multiplier of ADR. It's a multiplier from distance from the supply to the demand, or demand to supply. But this works. It's amazing. I think, Gene, you did have one of your tests where you illustrated using the 618, which 618 has been a standard target for a lot of traders who do use fibs, who fib out your highs and your lows, your retracements. Very, very strong. I think this is going to be a very, very good trading system once we get it tested out and ready for to put on the shelf there.
One thing I forgot to mention here, you notice here, I just loaded it onto all my charts. This is the dollar yen. You notice this one is blue, but this one is green. What green means is it should be giving a buy signal right now. Your trade area will change green to green, from blue to green, when it's signaling a buy. If it was signaling a sell up here before, when we were back here, this would have turned red. So when you look at a chart, you can say, oh, it's red, I'm into a possible sell. Or if this one's green like it is, if we look back at dashboard, this is the dollar yen. Yeah, there's the dollar yen signaling a buy. We also got a signal a short on the euro. Yeah, see there how you see how it turned red? Now remember I said right now it's set at 4, so the supply zone, you could see just by looking at it that you can fit 4 of those in there real easily. And our take profit is set at 0.5, so we'd have a take profit down to here someplace if we took this trade. And our stop loss would be set up here.
Well, that's automatic, right, Gene?
Yeah, as soon as the trade comes on, those will place, if you got them turned on, they will come on automatically.
And the stop loss line too, correct?
Yeah, and here's a short, another short. Did we look at, here's another short. It's telling you to take a short.
Could you take that just to illustrate? Or is it?
Okay, let's see what it'll do here. Okay.
There you go. See?
Okay, I don't think I got the take profit turned on, do I? Maybe not.
Oh, I thought you did. I thought you had it at 0.5 was the default, unless you didn't turn
I
it
had
on.
it set, but I didn't have it set to true. Did I have it set to true? No, I got it. So if I turn this on,
There you
here
go.
it is. See, 0.5, it goes right between here and there. So if we measure the distance,
It's a thing of beauty.
it should be 28 that direction and
28 that direction.
28 in that direction. And you see it took the trade. We were just in the red zone. Actually, it's actually retracing a little bit so that if it goes back up inside the red box here, which is kind of hard to see, it's right in here. If it goes back up inside there, that's probably changed back to blue. But right now we're in the short trade zone. So, and there's our take profit. Now, like I said, if we had that set to opposite trade, it would wait till we got a opposite signal down here someplace. If we got another One thing that might work good for us, sometimes these things, you know, they'll come back down. They may not even reach 50% and they'll start forming another zone in the opposite direction. That's kind of what I put that in there for. So that way you could turn that exit on and you can leave your take profit on. And if it does form another zone here before it hits your take profit, it will kick you out.
Yep.
And possibly even take a trade in the opposite direction. Of course, if you're on a new candle back on the dashboard, you could even get into a trade going the opposite direction, because sometimes, I don't know what we are here. Here we're kind of not really, but if you get one that's, you know, it's in a long, say it's in a long downtrend and it pops up just a little bit, it may not hit the 50%, you know, and then it'll continue on down. So you may have got in and that. Of course, if you use the heat map, let's see, what does the heat map say about this one? This one is the Aussie dollar. Let's see what it says. It says it at, let's put it at 4 hour. I like 4 hour.
Yep.
Aussie dollar. Well, it's telling us short, but not a confirmed short yet. See, so it is saying we're short, but it's not a confirmed short, and we are in it short. So we're, I guess we're kind of going the right direction. But that's one thing you can look at one time. You know, if you got this in the alert mode, like it is now, that's why these are yellow. You go look at them, and then you can look back at your heat map and manually look at it, or you can turn it on and let it decide for you too. So, you know, whatever you want to do, you can let that decide. Right now, it's not telling us to take a short, but just go through a bunch of these here real quick. There's the one that's giving us a green one. See how close these are right on top. See, here's what happened here. They right on top of each other, so you would have never got anything there. And this is what I was saying. See, sometimes you get a big long spike like that, but it may be over here. It could be on this first candle. So you'll be way down here in the price, but this box will not be there yet, because it takes a couple closed candles. So you look at it, they say you look at it over here when it's on this candle, and you say, well, why didn't it get in on this trade? Well, because when this spiked way down like that, when that spike, say it was over here, your price is already out of your sell zone in this case, you know. But now, actually, you would have got in on this one, you know, over in here someplace. As soon as this box forms, if the price is in the blue box, it will take the trade. So you probably would have got in about right here, I would think, either on the open of this one or the open of this one. Just depends on when the box popped up. So say if you got in right here, you could have got a good trade out of this one. Even 50% was probably down in here, is like 63 pips. All the way to the bottom was 139. So you would have caught this monster. And if you would have had it set at 50%, you probably would have got out already, though, wouldn't you? On that, let's see, what is 50%? About 72. It would have been real close. You might have got kicked out right there. You might have hit your take profit right there. Would have been real close. If you didn't, it would have pulled back here, and then you would have definitely got it down here. So, but let's see what else we got going on here. This would have been a nice buy coming out of this zone. Could easily hit your 50% right in there.
Now, hey, let me interject something real quick, Gene. Doing this manually for a while, you know, again, rule of thumb, those boxes form, they paint within minimum of 3 candles, and the most I've seen it is like 6. So I think, Gene, I think 6 was your default, right, on your width? of their box.
Yeah, on the width right now, I got it set for 6 candles. Yeah.
So I think you're safe there. But so just so you know, when you start looking at these, it will not paint until minimum of 3 candles. And so you can see with the blue box there that if it was a 3rd candle, you get in on a lot of these a lot quicker. And like I said, Dan and I have sat many days going through charts, manually looking for setups and placing trades on the supply and demand, and putting our targets at 50%. And was it like 9 times out of 10, Dan, they hit the 50%?
It's the vast majority.
Yep, it was amazing. But what I like about, again, this is pretty much pure price action right here.
Yeah. Here's another one you could have caught, and if your stop loss was up here, you would have been safe, and you still would have got 50% over here.
Yeah,
I found that I've looked back at a lot of these, and by putting the stop loss right here, you say, well, why don't we put it 1 or 2 pips above it? But very seldom have I ever seen the price go back and just touch it and come back out like here. So you're a ways away. Here you're a ways away. You know, very seldom has it come back and touch that point to hit your stop loss if you're going to hit that stop loss. So even 1 or 2 pips above, as far as I could see, didn't make any difference, because very seldom did the price come back to your exact pivot point here. These are actually, you could call these pivot points if you want to, swing points.
Yep.
But as you look through them, you'll notice that you never see one get back up there. So very seldom. So it's very safe just to put it at that opposite side of the box. You look at here, all the time we came back in, we never got down there. This would have been a 50%er right in there. That looks like 50% easy.
Beautiful.
Here's another one up here. This would have been a 50%er. And you see, you're pretty safe by just keeping it there. Or you can use the trailing. We're still testing to see just what we're all going to leave in there yet. This is a winner, 50%. Here's another winner, 50%. I mean, of course, we're looking on hindsight. You know how hindsight is when you look at charts. You could only play old charts. We'd all be millionaires. But here you got a winner coming out of here. And we got 1, 2, 3. You got enough candles there, so the box would have popped up probably over in here someplace. So we would have been safe. Could have hit 50%. And here we're getting close to 50%.
Yep.
50% is a pretty safe bet.
Yep, definitely.
There's another one that Matt looked at that before the big spike. Of course, we would have got out over here anyway. So, okay, that amount.
Well, what's nice, Gene, about what we've done with this is putting that option in there to get out on the opposite signal. So, like you said, you get one that doesn't quite reach 50% or whatever your target is, and you get a new signal. You're out with profit. This is just so you know. Fabio's asked me in the past, well, which one do I like the best? He knows, and I think Trish and Brian know that I'm a big Haas fan, but I love trading trading price action. Get away from those lagging indicators, and price action is where it's at. So if you can read price action, and which this really helps you do, this has to be one of my favorites.
Now, another interesting thing to look at there while you're on that screen, Gene, if you could put all the subdems back on. Show you something that I like to look at.
Let's hit the reset.
Yeah, okay. Now, if you scrunch that chart vertically, look and see how many red ones you have versus the green ones. There's more force on top, it looks like, supplying than there is green ones on the bottom demanding.
Yep.
So you might think, hey, this has a propensity to be going down.
Mm-hmm. Right. But exactly, and that's what I try to illustrate it with the old tug of war analogy, and so yeah, there's a lot more weight on top and there's pressure pushing up. yeah, you think that you're, and again, it's in a downward trend right now. But we only focus on the two current supply and current demand zone.
Right.
Yeah. Now these are, of course, I'm on the 1 hour, so like here, you look at here, let's look at these last two. What's the distance is here? 126 pips. Now you start going up into the 4 hour. Of course, you're going to get more, a chance of more pippage. It's going to take you longer. Might be a little safer. Like here now, that would have been 418, but look at it taking you what, a month and a half.
Yeah.
So
you're exactly, but you take, I guess the word patience where you trade it daily like this, and one trade will bring you in a month maybe 400 pips, but now you times that by 10, 15 trades a month. That racks up to some nice pippage right there.
Yeah, I think most of us in our group, I know we kind of lean towards the daily, in and out in a day or a week at the most.
Right.
Where the big banks, they may be in there for maybe a month, 2 months, 6 months. They're the long term. I always says a long term trader is a trader who missed the exit. That's what I always say.
Yeah.
Well, I'm, we're going to wrap this up here in a minute, but just a quick plug here. Starting next week, I am going to, this is the end of our free webinar promotional time, and starting next week, I am going to, like I said, break my rule and show some live trading of the SupDems, and I'm definitely going to show my 4 hour, and I might even show my daily also. And just go through the charts on a daily basis, looking for the setups, looking for the targets, and just repetition. And again, the more you see this, the better, the more screen time, the quicker you see the setups. Just SupDems are just a beautiful thing. Again, this is being recorded for all those who are not here, who happen to listen in the future. I highly recommend that you go look at that video. All right, that's posted somewhere in the middle of our forum. I posted it probably a couple of weeks back, and it's a video on supply and demand. Very simple, very educational. All right, that being said, I want to just shout out to thank you guys for coming, and we are having a promotional, I guess, what do you want to call it, Dan? Like a contest. We are going to start our sign up on the web page for the subscription webinars. I'll send out emails to all of our current clients, and with all the details of the subscribed webinar. It's called the Members Room. And what we're going to do, we're going to give away a free trading system to all who sign up and make the first webinar next week. So whether it's there's only 3, there's 10, there's 20, whatever. One of those people will put everyone's name in a hat. I think Jimmy has some kind of program where you put the names in and the program randomly draws the winner. So that would be for a free trading system of your choice. It could be one that we currently have, it could be the SupDem, or it could be a future one. It could be your total choice there. So that's a shout out to you guys who are current, and anyone listening to this between now and Monday night. And again, I'll be sending an email out with all the details of the new members room. Okay.
So don't forget to go to our website and get subscribed for the webinars now.
Yes. So any questions before we call it a day, or for call it a night for you guys down under? All right. John says good night. Trish, you guys okay?
They're all good. Thank you very much.
All right. Fabio, you all right, buddy?
He says sweet dreams.
All right, you do. Okay, guys. Well, go ahead and dismiss yourselves, or we'll dismiss you. Have a great time, and hope to see you next week.